after a rough May for oil, WTI is off to a challenging start here in June, with currently prices down more than 3%, under pressure after OPEC Plus unexpectedly rolled out a plan to restore some production to the market later this year, seemingly adding to the bearish momentum we've seen in the crude market. We want to make sense of what's happening. Clay Seigle joining us, Global Oil Service Director at Rapidan Energy. Clay, thanks very much for being with us. As always, nice to see you. What was your interpretation of the OPEC Plus update over the weekend?
Hey, John, it's great to be with you again. Well, our interpretation is that the decision is relatively neutral. OPEC Plus is sending a signal to the market that when conditions warrant, it will be ready to restore some of the oil supply that it has cut back on and curtailed over the last year or two, but not until that point. It's kind of a complicated decision because there's multiple layers, multiple groups of supply cuts that have been in force. So just to simplify things into two groups, the first group of supply cuts totals 3.7 million barrels per day. Those were previously set to expire at the end of this year. The group has now extended those supply cuts to be in force all the way through 2025. The second set of supply cuts, which totals 2.2 million barrels per day, was set to expire actually at the end of this month. For those, they did two things. They said, first of all, let's extend those all the way through September, through the third quarter, and then let's very gradually, over the period of another 12 months, rescind those supply cuts and gradually add oil supply back into the market as conditions warrant. But crucially, they said that if conditions are weak and the market is not ready to receive new supply, they can always reconsider and potentially modify that timing.
Really helpful breakdown, Clay. I mean, at the end of the day, the market tried to find its own conclusion that this ultimately leaves the market feeling, well, there could be higher output at a time when people have already been concerned about the demand picture. I guess for people who are trying to position or invest around this news, what would you say to them right now?
I would say keep your eye on the ball, which is the trajectory of global oil demand growth. I mean, that's really the X factor for producers, for consumers. And at Rapidan Energy Group, we're still relatively constructive on oil demand growth for this year. We're anticipating year-on-year growth of 1.5 million barrels per day. About a third of that is in China. Other growing areas in the non-OECD economies like India and other Asia, Middle East, some Africa. But it's slower in Europe. And it also varies by let's say, oil product. And so diesel has really been the laggard this year. We had a really warmer than expected winter, which has kept those inventories for diesel elevated. And we've seen slower than expected growth in diesel in important markets like China. Also in Europe, where the macroeconomic path has really been challenged. We're expecting a turnaround for diesel late this year and into next year. And we're also seeing more strength in other parts of the barrel, including gasoline, including jet fuel, petchem demand. So it varies by product and it varies by region, but we are still constructive on the trajectory for oil demand growth. And that's the key to how quickly OPEC Plus will add supply gradually as we get into the end of this year and into 2025.
And then if I'm taking a look at what's happening with the price of oil, and Clay, hopefully you can play along with me in WTI quotes. I know obviously different players look at different parts of the market. People were talking about Brent getting below 80 today, but most of the time for our audience, we quote what's happening in New York trading for WTI. And you go back a couple of months ago, there were geopolitical jitters in the air. We saw prices well above $85 a barrel. That geopolitical premium seemed to come out. For a while, people felt like, okay, maybe that $80 level is one to be watching. But here we are now breaking, at least with WTI, below 75. Is there a floor here to be watching, like $70 oil? Like, what are some of the prices you're going to be tracking in the next few weeks?
Well, we still believe that there's a path for WTI that's above the mid-70s and even into the 80s. but it is very dependent on that trajectory of demand growth. And one of the indicators that we look at to see if that demand is materializing is the level of observable oil inventories around the world, both those that are in onshore tanks and those that are oil barrels at sea along the oceans. We look at crude oil and refined products. And what we've seen so far in the second quarter is kind of interesting, and it's a little bit of a concern for the marker crudes like WTI, because we have seen some accumulations in those oil inventory levels that we were not expecting. We were expecting supply-demand balances to be a bit tighter than they appear to be at this point in the quarter, 2/3 through. So it's really important to keep a close eye on those inventory levels for both crude and refined products. For WTI, we especially watch the inventory levels of crude oil at the Cushing hub in Oklahoma, but also throughout North America. And the second thing to keep in mind is the potential for a geopolitically inspired or driven disruption to oil supplies. That's the most underappreciated risk in the market today that could send prices of WTI higher. And in that case, I've told you before, the thing to keep your eye on is the potential for Iran to become directly involved in the Mideast fighting. That hasn't happened so far.
Right.
The clashes between Iran and Israel that took place in the middle of last month did not result in that disruption scenario. But we're not out of the woods yet, because there's still hot spots, trouble spots in the Gaza Strip, in the border clashes between Israel and Hezbollah in Lebanon that could potentially bring that disruption scenario to the table.
Boy, such a volatile